After the fall in the last quarter of 2018, the markets have rallied in 2019. So now, where should you find value in the global small cap space? Virginia, our Vice President and Portfolio Manager of the 4-star bronze-rated Invesco Global Small Cap Fund, is here today to share her picks. Virginia, thank you so much for being here today.
Thank you. I'm delighted to be here.
Would you be able to share some ideas that you like, especially that investors should hold for the very long term?
Certainly. The first thing I like is Equinity Group. They are the largest share registry and employee share plan in the UK. As you can imagine, for a large corporate publicly traded company, keeping track of shareholder information for voting and for dividend payments is not an easy task. So barriers to entry is very high because you need a robust software system and also to comply with high regulatory. So for them, another benefit is that they have is a sticky business. They have very high recurring revenue. So we expect the company to grow 10 to 12% in earnings, and they're only trading at 10 times this year's earning. That's a very attractive opportunity. A second name I like is Inter Cars. They are basically the O'Reilly Automotive of Poland and Eastern Europe. What they do is they distribute aftermarket car parts for repair shops and garages. The key in this business is product availability and speed of delivery. So because professional mechanics care most about turning over their service bay, so they want to repair as many cars as possible each day. And Intercars is the #1 player in their markets, 7 times bigger than the #2 player. It is still a very fragmented industry, so they still have a great long-term opportunity to gain market share and to participate in the market growth. In fact, when you look back in the last 10 years, the company have grown their earnings 26% per year. And the company is currently trading at 11 times this year earnings, so very attractive. Lastly, the company I like is Encore Capital. It's based in US. They are one of the largest credit card debt collector in US and Europe. These credit card debts are basically debt that the banks have already written off and are selling it for pennies on the dollar. So because of what happened since the financial crisis, the competitive landscape has shrunk a lot because of very high regulatory hurdles. So Encore Capital is the #1 player in the US and many of the other European countries. For them, we also see a big tailwind from having higher credit card balances and higher delinquency. And so we expect the company to grow 15% in the next few years, and it's trading at 6 times this year earnings. So as you can see, even with 3 examples, why I'm very excited about the funds with higher growth opportunities and lower valuation than the markets. And I think these 2 attributes are key that investors need to focus on when they look for their next investments.
Thank you so much for joining us today, Virginia.
Thank you, Ruth.
For Morningstar, I'm Ruth Saldana.